Hey, what's up, everyone? This is Chris Hendricks. So today I'll just be going through a few setups, mainly I think GER30 as well as US30 and maybe a few currencies. So I'm just gonna jump into my trading view platform, and I'm gonna start off with GER30. So basically, this is an index, so I'm just gonna jump in from the 4 hour time frame, as that will give us enough information, because this is usually um, stuff that happens within like small time frames, because you can't really swing trade with like indices that much. So basically here in the 4 hour time frame, we had a bullish flag right there, as you can see, from this point, which was potentially the lowest point right there. As you can see, it's a double bottom, so it was our lowest point, and we could have maybe this as the previous high, going to that point. So you can see the bullish flag really bought. It went bullish for a while, and it doesn't turn. So two things could happen right here. The price could end up forming structure like this, and as it gets to that point, it might just sell off or do something like that, because this will be like a decent, an ascending structure where you have your 1 2 3 touch, the third touch having the highest probability. So it could sell like that, it could end up like this, but then that's not a given. That's just a scenario that could happen. But so far we had our bullish setup right there, where it was just a nice bullish flag, which was relatively flat. As you can see, we had this as our first touch on the support, this is the second one, and this, even though it didn't touch the trend line, we still count this as the third touch. And if you do want to confirm that point, you can just draw a horizontal line right there from the first touch, and it will give you more of like an inverse head and shoulders. So let me just show how that would look actually. So you can see there was our left shoulder, the head, and now we had the right shoulder where it just shot up. So we had a couple of confirmations about the setup, but all in all, it was a very clean setup for a buy, and those who locked in, they're probably within decent profits. So I'm gonna move into US30. So the same thing applies. So I'm just gonna jump to the 4 hour time frame, and actually a lot has been happening with this. As you can see, it's just moving correctively in the 4 hour time frame in a descending structure way, which means it's trickling to the bottom. So but if we're being optimistic, you can see that we can make use of this descending structure, the current market. So you can see that we had this as the first touch, this as the potential second touch, which actually didn't touch, but we still consider it as the second touch. So we had our perfect third touch right there, and as you know, with the third touch you have the highest probability. So Let's just zoom in and see what US30 presented us with. So you can see right here, we sort of had like a correction right after this huge impulse from the third touch. As you can see, let me just draw it out. A huge impulse, and then the price was just going sideways, meaning that this was the correction phase. And as you know, every time the market forms an impulse, the following phase will be a correction, and which would mean either a continuous correction where the price will just continue with the initial direction, or it could mean a potential reversal of the market where the price will just buy and start correcting, but then for a sell. So those are the two scenarios that could happen, but in this case, just hold on. So in this case, we had a nice bullish flag to the upside, and this was enough information for you to buy. As you can see, we still have the 1, 2, 3 structure right there, with the third touch having the highest probability. So from the third touch, you could have just went long and locked in your positions right there, and you would have been in very, very decent profits. As you can see, this is the 4-hour time frame. So this is about let me just, to the current price, this is about 8%, which is ridiculous for an index. So you would have maximized your profits there, and basically had a field day. So the second opportunity, as the actual third touch from the bigger structure, it was more of like a risk trade, because you didn't have enough confirmation or confluence. But then once this bullish flag formed, you had an idea that, okay, I kind of have like more than two confluences which confirm that it is the intended direction that is taken, which was perhaps like a reversal, as the market just changed trend as it was trickling down or in a descending structure where it just bounced off from the third touch and changed the trend basically. So you can see from the first flag, the price shot up, and if I scale down to the 2-hour time frame, we kind of had like something similar that happened. As you can see, this is more of like a flat flag or correction, because remember the two basic movements of the price is an impulse and followed by a correction, impulse, correction, impulse. So the same goes for a sell, as you would have an impulse, correction, impulse, correction. So in this case, it's a bullish one, and if we do count the touches, the amount of touches that we had on the support of the flag or correction, we would consider this one as, okay, let me just zoom in. Would consider this one as the first touch, and would have a very obvious second touch right there, and counting this as the fourth touch. So right after those guidelines or steps or rules or philosophy that we follow, the price just shot up right after the third one. So the same thing keeps happening. Remember, the third touch always has the highest probabilities. In this case, the strategy served us right, as we could have this part of the market as our third, well, not third, but the final level of take profits. So would have all the take profits at this point. I wouldn't say it would pass that point, as a double bottom could happen. The price could just get there, maybe pass for liquidity reasons, and shoot back down and just form maybe like a bearish flag to the downside. So that could happen, or the price could just pass and continue going up, but then that wouldn't be the end, as the price could just give us a huge clear impulse, followed by a nice continuation to the upside. So you just need to watch out for those two outcomes. Follow the market, and you should be sorted. So the third setup that we're gonna check is it's actually a currency. Okay, let me just clear my screen and everything. So you can see that we have rather bizarre movement of, because it's just going correctively, but in rather like a ascending manner. So we're just gonna focus, once again, we're gonna focus on the current market. First tool that I'm gonna use is my trend line, just to get the structure. And as you can see, we have an ascending structure. We have our 1, 2, 3 touches on our resistance, which in this case we look at instead of counting the ones at the bottom at the support, because this is an ascending structure. If it was a descending structure, that's where we consider the support touches instead of the ones on top, which is the resistance. So right now you can see that this is how our structure looks in the 4-hour time frame. And if you look carefully how the price got to the third touch, which is this point right here, let me just try to anchor it by marking. So this point is our third touch right there. Hope everyone can see that. And just look how the price got there. It got there correctively, and just look, the same applies. 1, 2, 3 touches, the third one having the highest probability. And as you can see from that point, the price just sold off. So I'm just gonna zoom into the 2-hour time frame to get a clear picture of what's happening so far. So you can see the formation of the market was rather an impulse to the downside, and now the price is moving rather in a correction. So that tells us that this could be happening. We could have an impulse and a correction, which is potentially a continuation to the downside. So we could anticipate the move to the downside, rather like the price just reversing and going back up. So we're gonna be optimistic and say that this is a bearish flag. even though it's not flat or favorable in terms of like how the formation is, could be rather confusing, but I've actually seen such flags or corrections happen before, and some of them they did work. So this is just obviously you would have to utilize risk management as your priority. So you can see if we count the touches, is we have 3 touches. The price shot down, but then it's still like trickling sideways right there. But if you did use this as your third touch and entered right after the confirmation, let me just zoom in to the 1 hour time frame. So you can see you had candlesticks that informs you of like a reversal or whatever. But say you did enter that trade at that level, so you are still in the clear, as you can see that the price really hasn't went back to break even. So you could hold this trade potentially to this previous low, or just like right above it. It depends on your preference and whether if you're gonna stop trail the trade, where every significant movement were towards your profits, you keep adjusting your stop loss under profit in proportion to the price itself as it moves. In this case, it's a sell. So let's say a huge movement to the downside happens, you're just gonna take your SL, your stop loss, and basically follow the price. You adjust it by setting it under profit and moving it accordingly to maximize your profits and minimize your risk. So you could do that, but potentially the price could get around to these areas, but it is not a given. So it's just a matter of observing and being vigilant. So this is the last setup that I am gonna showcase, as this is like a quick overview of what's been happening this week. Today is a Friday. It's almost midnight, so this will be a video just like wrapping the week basically. So this is a Canadian Japanese yen. The previous one was USD CAD and US30 and German 30. So the last one we're going to look at is Canadian dollar against the Japanese yen. So once again, I'm just going to start this from the 4 hour time frame, because I'm not interested in the daily stuff, because swing trading is something that beginners shouldn't do, because it's more of like an advanced set of like trading stuff. But we have this ascending channel there, and if you look at the previous high, I'm just gonna grab my horizontal ray and put it right there. So you can see that from the previous high, which is this high right here, the price just sold off, and it was corrective in a ascending structure where it formed a basic structure with 1, 2, 3 touches, and look at what happened right after the third touch, which is considered to having the highest probability. The price just sold off, right? So you might look at this and think, okay, cool, why are you showing us something that already happened? Just listen, there's still more opportunities to this setup. But basically I'm gonna break down the reasons why this is a strong sell. Firstly, we have this double top. We call this a double top, or in simple terms, it's just a M pattern. As you can see, it's basically an M pattern. So that was a strong confirmation of this structure selling to a downside. So I just want to show you something interesting about the third touch of the structure, or the second top of the double top structure. So this area is the third touch, right? So I'm just gonna I'm just gonna move these up. So let's just see how the price got to the third touch using our trend lines. So you can see we kind of have like the structure where it is like this. So you can see this being our first touch, our second touch, which didn't actually touch, but we still consider it, and this one being the third one. So the same thing happens in the bigger time frames, scaling down to the small time frame. So it's just a repetition of basically these hold on, it's just a repetition of the strategy and the importance of the third touch being the highest probability. So you had that confirmation of the small structure there within the big structure. Just hold on. So we had that in play, but right now, as you can see, using our horizontal ray, we sort of like reached this previous low, and the price just rejected right there. So what could potentially happen right here is, let me just grab my boss tool. So this could potentially happen. The price could basically form a nice pattern right there, a flag, which will give us a very clear opportunity to scale down to the bottom, all the way to this level, which is the very, very lowest low in this case, and that would be a very, very beautiful setup, minimizing your losses with your stop loss right there, because risk management is as important as your trading plan. So that is the setup of Canadian Japanese dollar. And remember, this is not set in stone, it's not confirmed, or it's not like this is definitely gonna happen. It's just a prediction, which means if a flag does form, where we basically intended that it would form, the prediction would basically unfold and would act accordingly. So if this pattern did form and we had the 1 2 3 touch of 1 to 3 touch formation. That would give us enough confirmation that we can take that as a berry setup. So that is it for today's video. I hope everyone enjoyed. Just make sure that you subscribe if you haven't. We've been posting content, and recently we posted like 2 vlogs and stuff, so make sure you guys watch that. I'll put the link down in the description. So that is it for today's video. It was just a quick overview of what happened this week and in preparation for the next trading week. So my name is Chris.